Dun, dun, dun. Hey guys, morning. Level 2 here. We're in a bit early today. It's now 8:30 a.m. on the East Coast. Let's get to some analytics first. Doing the trade plan on the fly. Okay guys, morning. We're gonna start to do some analytics. We're in a bit early this morning at 8:30 a.m. Let's get this going. So alright, so we have our deviation levels we're looking at today. Point of control, go to the analytical chart. Don't know what that was. Alright, go to the analytical chart, deviation. Guess where deviation is at yesterday's high. So we had push right higher into the 70 range we were talking about, and then a dip to value. So mostly what we got was the value trade on the retest of 69.70. So we got in at 68, looking for value area high to drop down, following the order flow. Point of control end up at 64.5. We have a working order sitting here at 41. Areas of inflection we're looking at is, since we got support here, we use the inversion, looking for that 161. That 90 level may come into play this morning if we do get a breakout. We have a 2 contract sell right here on the open at 75. We look at what the high was. So we have 72 to 75, so you can average in at 73s. 73 would put you behind this fib level we're using because we are at all-time highs. Market looks pretty strong, so let's go to news first. Not much in the way of news, except probably Chinese gonna implement some stuff to be fiscally prudent. What we have on the calendar today is we have oil. Let me just take off this. Right, let's use today's filter. Right, filter. Right, so what we got this morning is we have FOMC members speaking, CPI, and we have Fed Chair Powell testifying again, and 10:30 a.m. What we're looking for is a major stop for crude oil. So be trading crude oil and ES today. May trade through the news. We know if you're on top step, you might not be able to trade through the news, so be careful just identifying levels here. This is for educational purposes only. I've got the chat popped out here if you guys have any questions on what we do and how we trade. Alright, so let's get into what we're looking at this morning. We have on live account, we have a sell news alerts. Alright, so we have a sell sitting right here at 73 on the live account as of now. Looking for, you could watch the overnights and yesterday's volume and value area here. We have delta set up in a particular way. You can see where we are 79.5 as we break our point if the market does rush up that side. So you can see more or less a Gaussian pattern from yesterday. Delta was pretty balanced through the open, through the close. We had some volume, so we had swing up, swing down, more or less a value trade from this point here. We got into the value trade and took it as it was. Simple trading strategy. We looked to sell 70s early, got the 70s, got over the 70s at 64s, and then with the retest of the high and look for the extension down. So we made some money on the ES yesterday. checking out a bit on the first contract, didn't hold that long, took just 1-to-1s on that, didn't take the extension. On oil, we'll be looking at the micro composites and looking for areas we want to fade this morning because of, let's close this, look on this oilprice.com. Right, so you can see the build looking like from the API, looking like a bigger build than expected, looking like 6 million according to the API instead of 3 million. So if the API, if you look to fade the news or just prior to news, probably might be fading right here at 55, this 55 area here, looking for 50 to 55 area. We're looking at that nodal value, and we know where we stops would have to be, looking at tighter stops this morning just to prevent being too aggressive in the market. So you can see right here we have a kill zone, we have primary kill zone here for the next 35 minutes, secondary kill zone. Want to see a clean break to the upside or the downside. We know here is the inflection point at 51. We didn't get quite on the retest of the low. You can see it overnight here. We got that is a simple trade on the open, but we wouldn't have taken that because of the oil news. Right, so what we're looking at is fading the market this morning within this particular range, which is 51.80 to 51.650. So you would have our aggressive sell here at 50 and using a 30-point stop loss for the open. So you want to be aggressive from the point of control. So 55 is your perfect entry here. So we're selling 2 contracts at 55. Make sure you have your reasonable stop loss provided here. Want to see how the market opens with the weaker money in the market, pushing the market to the upside. Haven't gotten news from Russia as yet to see if Russia joining the OPEC side of things. So we just want to keep that in mind in case we see a news bubble pop up. I mean, that will already be too late because we'll be in the trade already. So looking at this initial at 55, 50 to 80. So you want to fade 50 to 60 in the first instance. So how you can manage this is have 1 contract at 50 and 1 contract at 60. You could be averaging just to give yourself a little break into the market. You want your stops to be between maximum at 80 to 85 for this particular trade. You're looking for, this is a full value trade. They just would have gotten here last night. They were paying attention, we weren't paying attention. We're looking at the results of the Democratic Party. Is a lot of fun for us to watch. So we have a 2 contract sell here at 51.50. The expectation is wait to hit point of control, find some resistance, and then 51.80s would be possible. Probable trade if the market does punch way higher than we expect. Market opens in 20 minutes, so hopefully we'll get filled, especially on this punch here. So that is oil, and on the ES we have 72, looking to sell 72s, 72, 73s in the market. So this is a 15-minute chart. We'll break it down to a 5-minute chart and look at, so we're using MC point of control. We don't really use the profile for oil, we use more or less swing profile for oil. So we want to see what is the active swing low to swing high as it is here. Want to see where our price acceptance is. Price acceptance point of control, you can see order book filling up at that 50.80, which was possible from our analysis. So we're looking for 1-to-1 and then a 2-to-1 on the trade. So just want to make sure data is correct. Using pointer control. Pointer control is where market kicked off. You can see it use that 80 level kick off. So we're looking at 50, then to go back at 51 level, break and hold, push to the upside, and then reversion back, find back balance in the market. That is active value area high. You can see where value is there also. And on the ES, we're looking to fade at 73, 70 to 73 area, 74, 75 area. So you have 70 to 75. We're looking to fade that area. We average in with 2 contracts. We're looking to average in with 2 contracts. So you can use one at 70 if you're aggressive. But we're not being aggressive this morning. And bridging is one way we look to trade. So we have deviation set up. This is a 50-minute chart. So you see deviation is right at yesterday's high. That's based on our implied deviation. Our implied volatility, you can see 74.75. You can use one other tool here, which is go to here, go to use volatility, standard deviation, show the value, save that, and look for a deviation for the day. The expected range really is 48.7, so you have some increase in volatility over the last 20 days. So if you're looking at which volatility you're looking at, you look at a little longer time frame. System is a bit buggy this morning, charts. Make sure we have the active profile on the monitor. What's going on in the market in a 5-minute chart. You have your delta loaded up. You're looking at getting at 73s. Look for 6.5 stop loss and 1-to-1 trade in the initial to see where the initial TP is, and then run your secondaries accordingly. Right now you're looking at whatever the active volume low is, value low, sorry, to get into secondaries, get the secondaries out. You can see some price acceptance in this area. So we're talking about the Gaussian pattern that formed yesterday. You can see basically a Gaussian neutral day pattern, range day. So the expectation is if we do break to the upside, we're using all-time highs as our bridge to cross, and the expectation is for at least a 6-point reversion on or prior to the open from From the advice is between, if you're looking at 70 to 75, the actual we have is at 72.5 on trading on what we're looking at. So our entry is test off that overnight high. We have our stops way up here at 79s. Make sure that at least your stops is behind 75s. 76. Just looking to fade the logical move to start the morning off. A bit early this morning, so we're in the kill zone. You can see we're at 72.5 kb. Come here, look at that, look at value, look at volume, look at where the point of control is at 65.5, and you can see where our TP is. See, within the kill zone is decision time if you want to activate the trade or hold. Let's look at quote board. We are 200,000 contracts traded on 1890 on here. 12.5 points up. We're looking for that 74.75 test minimum this morning, so you want to hit fade the market, hit that all-time high, which would have a magnet. You see the shadow on the on trade from yesterday. You could see, if you look at your 30-minute chart, you would see where the shadow is. So you're looking for the active entry. Of either value high or point of control. Active value high is the high of overnight. The reason we have that high overnight is this is London open here, which was at or about yesterday's point of control at 65.5, give you 64, 63.5. Push to the upside and then meander along, looking for the decision time. Trying to see where the profile is gonna load up this morning. So you'll see we have some overnight trading right here at that 57. We'll be monitoring active value area for where we want to close off and take profits in the market. So you can see we look at targeting point of control from any one of our entries. Always remember to put it 1 point, or our advice is always put it 1 point ahead. And knowing that we could be run over very early, very quickly on the open. So, normal thing with questions and stuff. If you have any questions on what we're looking at, let's get to that crude. Yeah, just want to see that test of that 50 to 60 area, 51, 50, 50, 60 area. This morning on the open, the expectation is for post news is for bear to come into the market. And we look for simple entry here. We got a simple entry at 50.55 to 50.40 is kill zone we're looking at also. If we do go on the long side, we have a single sitting here at 50.40 right here off the kickoff from the overnight, knowing where we have protection, knowing what the active is, knowing where our inflection, our points are. We have one order sitting here. That's a 1-to-1 trade. We just want to be in front of the active POC because POC is loading up. Ad blocker crash, whatever. Oops. So that is our live setups. Looking to buy 40s, 50-40, looking to sell 5150s on oil. Remember, we in rollover, so be very careful of what you do. And we in the news there. So that's the 5-minute chart. So we know we set up looking for that midpoint entry. Let's see if we can get an entry on the ES with logical take profits. Within 6.5 points as our stop. More or less position trade at. We're going to check out top extreme this morning. Bernie win last night by smaller than anticipated. Win is a win. Drop out of that. Boom. Didn't see by anything much by way of news this morning. To close it down. Right. We like to give ourselves enough space to be actively managing the trades, so active management is always important. Because wherever our active value area low would be our take profit. We know where's the lowest point from yesterday, 56. If we do get into the market, get filled. If you're looking at bridging, you could use one entry at 70, second entry at 74, which will give you an average entry of 72. May execute that 70 or above with a single on a live account at 9 a.m. So what we do is look the time, trade, still have our tools set up there based on our risk management. We allow the risk just a single on market sell or buy, and have our working order set up into prime positions. Also you want to enter, so you'll be able to leverage a little more on our first exits. Like the trade plan, always trade the plan the trade the plan. Do not deviate. If you deviate, it will cause trouble in life. So we're waiting to see if we can get filled by 9 a.m. If we don't get filled, we execute a live entry. Our stops are at 79 for 72.5, which is a 6.5 stop. Just want to see that test of the high, knowing where our node is, knowing where our area to look at. So if we do get a breakout to the upside, we would be selling 90. Monitor the market, look for push and then look for the fade. If we do get taken out, our perfect entry will be that we test up the high, leaning on what the high and the shadow was. We do see a lot of price acceptance on this side. So let's go to 1 hour chart. We do see a lot of price acceptance at the bottom here. Came down, pressed on the node right there. You can see node, shadow, node. Maybe shadow here, then the node. nodes. Guess where we tested, then push to the upside. So the extension is possible today up to that 90 area. If he is a bull and you're brave enough, look for that POC play or value area low. I'm not too concerned about value area high right now, so this might be an area for execution. If it's a bull, let's make sure. Yeah,
Order filled.
right, we got filled at 72.5, so we no need to enter a secondary reliable orders here. Dun, dun, dun. Just look in the feed. The market. We plan the trade, we execute the trade. I rather use booking orders. So our first take profit is at 66. You can see that is kickoff point. Right here, value and point of control. Right, the retest of the high, overnight high. Looking just to feed the market to that point and looking for extensions to wherever the active value area is. If we do get breakout, the closest stops should be behind 75, 76. Do not trade with a stop further than that because you may get flushed. As yesterday we sold some 70, it reached up to 74.25, 74.75 before the 6.5 range is what helped us a bit, and that range is built off of, and we need to check, make sure, right? So you can see 6.5 points. After that, we need to put that. We try to more or less not build algos, but right, so you can see we're raising up to 6.75 this morning. I just stopped. Yeah, a lot more. There's more volatility. There are a lot of hidden stuff to build this. By here, 27 ticks or 27.5 ticks. So 27 ticks is your mark. Using 6.5 because it falls within our range that we regard as safe. We could do 5.5 also as a tighter range. So you trade logically. If the plan does not work, it just does not work. Creating all-time highs is a difficult job to do. Very difficult job to do. If you have questions and stuff, no worries. I always have a timer when I buy. So this is what we'll be moving here to close out this trade. So what we're looking for is this trade to be filled, roll our stops to right behind last logical high, which would cut our, so our stop will be going up to 75 from 79. So we'll be in a better position to manage through the trade and look for the extension if we are successful on this. This is the most important part of this trade. In our opinion, this is how we manage our trades. Hopefully you wouldn't get strike for because I want to join the top set chat room, well not chat room, market forecast stuff, like to share some ideas and stuff on what we actually traded this morning and what we're looking at for this morning. So looking for simple inflections, looking for what you're looking at. If you're live executing, that's your live execution time there. There's your 72 to 75 live execution based on what we looked at this morning and how we trade. Well, we all guys trading remotely today. And having seen my construction guys got word last night that most likely they're expanding the scope of work from our old job, so may have to wait until probably month end to find out when is flight times and stuff, and the expansion might make me be out for a couple more weeks than expected, so it might be about a month. Need to go and do some prep work. It's a reasonable size tender, not supposed to say outside the tender is a couple oil companies, foreign oil companies in Guyana, multinationals, maybe looking at subcontractors in it. So let's see those guys up. Boom, 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 boom. And there it is. Oops, it's on Twitter. Don't need to use it on Twitter, use it on YouTube. That's the I need to watch my production podcast. This guy's pretty cool. Everybody's watching.
On the right way. The reason we have these forecasts is we're always looking at the context. We're looking for probabilities. We are looking for risk management. All three very important features to any trading plan. As far as economic releases due out today, pretty thin. We got some more Fed speak, some more talking Feds. Harker spoke this morning. Daly is speaking now. Powell speaking again at 9 o'clock. Probably going to be reiterating much of what he said yesterday. But we do have to keep our eyes and ears open to what he is talking about. 9:30 a.m. Central, the EIA crude stock number due out. More on that later. As far as the news is concerned, the coronavirus, now called COVID-19, fears have fallen a little bit as China announces a second day of lower infections, perhaps related to the way they are counted. JD is going to talk a little bit more about that as we move on here. U.S. stocks set to open higher and continue the march to the upside. Again, we're going to keep our eyes and ears on the talking Feds. The U.S. government expectation for the effect of COVID on crude demands is they're looking for approximately a 300,000 barrel per day drop in crude demand. OPEC is to announce its estimates today. The API announced a 6 million barrel boost yesterday. EIA expecting about half of that at 3 million barrel boost. As we get closer to the end of earnings, this morning already out, Shopify, CVS, CME Group, and Trivago after the close, Cisco, Marathon Oil, HubSpot, MGM Resorts, just to name a few. All right, I think we're in pretty good shape. Good morning, Caesar. We got a lot of people saying hello this morning. I love that. Always like the comments, questions, feedback, ideas, thoughts, heckling, all of it. Love it all. Good morning, Ivan, Troy, Caesar, Deg, John, Alan, Level 2, George, Kobe, nice to see you. I see a new name here. Good to see you. Welcome. Glad that you're here. Mr. Shine, Sam is here, and Jim A, Charles March. Good to see everybody. Why don't we dive in and look at the charts? Crude oil just opening up. We're going to start with the daily. So we are still in rollover with the volume in the April contract. That's the contract that most of the volume will be moving to. Is about a quarter of the volume in March. It's kind of funny when you look at rollovers. You're going to see the volume in the March contract fall off. You're going to see the coming contracts kind of increase in volume. We haven't not yet seen that much here, and we're still in the rollover range. So we're going to be watching this March over the next couple of days really start to drop in volume as the volume moves into April. Now, on the schedule, it says that the rollover is due to happen on Friday, but I'm thinking more like Monday should probably be the day we're going to switch. We'll discuss that as we get closer to Friday, and we'll see what the volume looks like on Friday morning. On Friday, either contract, the March or the April, will be perfectly fine to trade. Don't worry about being in the wrong contract, but think about moving to the April contract on Monday. Okay, so yesterday we kind of put in a test of the rollover range low. Well, looks like we're putting in a test of the rollover range high. Don't forget EIA 930 looking for a 3 million barrel boost after the API's 6 million barrel boost yesterday. Wouldn't that make sense to see the market heading lower if we have higher supply and dwindling demand? But we don't get to choose that. We're going to trade what we see. It appears as though we've opened. We may have left the opening range at the high of the session, which is, again, relatively close to the range of the upper end of the rollover range that established pretty much through the week last week. And here we are. So I'm going to be watching here. We are opening out of range, out of value. We've put in a gap. We're going to be trading the gap rules. If we can't close that gap relatively early, and I think I hear my ride coming down the street, if we can't close the gap early, our many overnight longs may continue to get paid. We may continue to get paid. Again, I'm going to try and stay patient and wait for after 9:30. It appears as though the relaxation or the subsiding of the COVID-19 fears have gotten into crude oil as well. So just keeping an eye on what's going on here. I don't know that we've left the opening range at the high or the low now. We continue to keep pushing to the upside. What are the opportunities up there? Unknown. Again, we're in rollover. We're looking to see these markets get this rollover over really before becoming anything majorly directional. So this looks like an interesting opportunity for us up here, either direction. If we take out the high of this balance that we're currently in, we may bring in new business to the upside. If we can't do that, we may see our overnight longs take this market back into range from yesterday and perhaps all the way down to settlement. That settlement price, $49.94. Put that on your charts. Here's the mini S&Ps. Okay, volume was okay yesterday. Open interest still seems to be piling in at these highs. Okay, we added 14,000 in open interest yesterday. Okay, volume, actually we had a little bit of an uptick on the volume yesterday as we tested weekly kickoff high. But since February 2nd, the open interest has increased approximately 98,000 contracts. So that's from February the 3rd, 1, 2, 3, 4, 5, 6, 7, 8 trading days, including today. That's not part of the 98,000, but that's some pretty decent money kind of moving into this market. And with the direction from the beginning here of the February 3rd to where we are now, you can see some pretty decent and aggressive buyers in here. Volume is holding up okay. That the increase in volume as we continue to the increase in open interest as we continue to push higher is encouraging for upside continuation. Anything can and will happen. A news event can change things in a heartbeat. Maybe JD has some other ideas for what's going to happen in our equities today. We're going to take a look at that shortly. But settlement all the way down here, 33.5750. We're pretty close to our overnight low. We are at risk of possibly opening at a gap to the upside. We've got some time with which to extend the overnight range a little bit higher. If that's the case, then we'll be working with gap rules. But I'm kind of looking at the overnight inventory pretty long here. The overnight inventory has not necessarily provided great opportunities. And you look at Monday here, the overnight inventory was a little bit lower. We had our best opportunity right off the low. Yesterday, we had an overnight inventory. We opened away from it. We did get a pretty decent opportunity back down to settlement. Is that going to be one of those days today? I'm going to be taking a look. If we can't continue this move to the upside at some point, then those overnight longs will get the willies and take this market back towards settlement. I'm still looking at these markets, the S&P and the NASDAQ, as markets that I want to buy weakness in. You can see the structure on the daily chart is still just very strong to the upside. We're putting in higher highs, higher lows with relative consistency. Now in the NASDAQ, we closed 2 days above weekly kickoff high, 95.13. Looks like we're headed for continuation to the upside. The volume is pretty decent in the Nasdaq. I would say it's holding up better than in the S&Ps, but in the S&Ps, the upside doesn't bring the volume. The downside does. The kind of question is, we really had no change in open interest yesterday in the Nasdaq. That kind of upsets me a little bit for continuation to the upside, but it's only one day, and we're continuing to see this market perform well to the upside. What else do I have here? Yeah, the open interest yesterday really was moot. I mean, it's less than 100 and change. So we're going to be looking for our opportunities here, our context, our risk management here in the 30-minute chart. We're opening in range and in value, okay? We're out of value in the S&Ps. In the NASDAQ, we're opening in value. NASDAQ has been presenting as a stronger market. It is already holding over weekly kickoff high. We've got settlement right here, 95.27 quarter, 95.27 quarter settlement. Of course, similar to the S&Ps, the overnight low just below that, but all of our overnight activity has been increasingly to the long side in short time frame. You know, look at the volume in the overnight. There's not a lot of volume. There's not a lot of longer time frame U.S.-based traders trading in that time. The same thing last night. Very low volume. This is shorter time frame, weaker money. And as soon as this weaker money starts to get the idea that they may not get the continuation in the U.S. session that they may be looking for, that's when we have our returns back to settlement. Here was it again
the
in the NASDAQ yesterday. Here's overnight, all above settlement. We looked to the upside, but eventually we did crumble back towards settlement just the way we did in the S&Ps yesterday. Some of that somewhat news-driven by our talking Feds, but
inflection right at 80.
So again, we're going to be opening in range and in value. That's going to tell me I want to stay a little bit more patient here in the S&P, in the NASDAQ than in the S&Ps. S&Ps opening outside of value near the high of the range from yesterday, where we're not in that type of situation here in the NASDAQ. So watch that opening range. Watch the opening range. If it's at the extreme high or the extreme low, that can be useful information for us. Early in the session, here's the gold. Look at how this market has just kind of become really range bound since the beginning of the year. Okay, here's the first trading day of the session or of the year. We've taken a look above. We've kind of looked below. We just kind of bouncing back and forth between what have become weekly kickoff high and weekly kickoff low. So we're really in a short time frame controlled market here. I don't see that there's a lot of bigger, stronger money coming into this market. As a matter of fact, yesterday we lost 800 in open interest in the estimate. We see volume kind of falling off as we kind of fall into this bear flag. We've kind of broken that bear flag. I'm going to be looking for opportunities to see this market come down and test weekly kickoff low at some point. We don't know when. Take a look now at the 30. Okay, we have very little overnight inventory. As a matter of fact, we're pretty much trading at settlement, 15.70.10 settlement. That is where we are currently trading. Is this a good opportunity? Probably not for an execution, because we're right in the middle of yesterday's area of value. We've taken a look down below. We've got our overnight high just above, but I'm really thinking that I want to stay patient in this market, as there's literally no change in the perception of value from where we closed last night to where we're trading right now. The opening range remains the low of the session, but because it's in value and in range from yesterday, it's not as impactful as if we had opened outside of range and taken the market away from that opening range in one direction or another right off the bat. So I'm going to just really try and stay very patient here in gold, especially right where it is now. Here's the euro. So the euro, we've had a couple of day sessions closed below weekly kickoff low, 109.40. We took a look back above it last night. We seem to be continuing to the downside. We added 4,000 in open interest, largely below weekly kickoff low yesterday. Volume was actually pretty decent. It ended up being kind of a positive day, but again, no close back above weekly kickoff low. Taking a look at the 30.
50 to 60, yeah. Optimal entries at 55.
Okay, we've got settlement right here, 0944 and a half ticks, 10944 and a half ticks. We've bounced off of it a couple of times in the overnight. We continue to see short time frame traders trying to push this market lower. This overnight low we just tested down below. We're going to be looking to see if we can find some opportunities down here near yesterday's regular trading hour low. But again, we may be kind of getting into a spot here where our short time frame traders may be getting too short to continue without the benefit of new, bigger, stronger money moving this market lower. Settlement again up here 0944 and a half ticks. Be kind of cautious. Try and stay patient. We are in range, but kind of below value. But it was a very narrow value area yesterday, as most of the activity was right up against that weekly kickoff level. Take a look now at the Japanese yen finally. All right. Overnight, we finally got a test of our recent swing low down here. Okay, that swing low was 93 and a half ticks. Well, we did take a look down below it in the overnight session. So on the daily chart, it looks like we have put in a lower low, and that supports the structure that we've been in for quite a long time in the Japanese yen here. Excuse me, I apologize. Yesterday we lost 300 in open interest, and that kind of makes sense. We had fallen kind of range bound, so we're looking for acceptance below this swing low here, the low of this area of balance, very similar to the area of balance we're currently in now. So volume and open interest continuing, just not to impress down here. Just the fact that we had that stab to the downside yesterday, I find very interesting. I'm not sure what this was all about, but it did put in that lower low. So we've got settlement way up here, 91.28. We're holding below a previous weekly kickoff level of 91.20. And we're continuing to kind of barrel into shorts down here. So we're really going to be looking for new business below that swing low, that recent swing low that we tested below yesterday. There's pretty stiff rejection there. So, but, you know, do we have a gap? No, we don't. Opening range extreme? No, we don't. But we are largely holding below yesterday's range. We've obviously rejected value from yesterday, which value low is right here at 91.20, which is going to be a pivotal level, as it is a previous weekly kickoff level that probably has lost some of its luster, but looking back at it, it was supportive here, was somewhat supportive here, was resistant here, and now it seems as though this market is attempting to continue to look lower. So hopefully that's going to provide a little bit of context for us. Don't forget, you're looking for probabilities, you're looking for asymmetric opportunities, little risk, big rewards. Let's see what JD's got to say. JD, how you feeling this morning?
Feeling great, John. Good morning, everyone. So global stocks higher overnight. John mentioned this earlier. We've got a lot of Fed speak today, capped off by Jerome Powell talking monetary policy and Steve Mnuchin's making a statement later. On the crude oil front, John mentioned the EIA petroleum status reports coming out at 9:30 Central Time this morning. Crude oil's up 2.5% already today, but I want you to keep this in mind. Russia still is not playing ball with OPEC. They've still refused to cut production. I want you to keep an eye on those headlines today if something changes. We threw out a Twitter poll yesterday. I don't know if you guys saw this. We had good response, close to 400 votes. The question was, what are we going to hit first, 3,400 or 3,300? The overwhelming, I won't say overwhelming, 2/3 consensus so far, the poll's not closed yet, 2/3 consensus says we're going to hit 3,400 before 3,300. I agree with that. Do I think we're going to see it today? Probably not. We had low Globex volume overnight in the S&P 500. So I'm going to be looking for, unless volume increases, I'll be looking for a thin to win type trade environment today. However, I am a little more inclined to sell some rallies this morning. And I'm going to tell you why. This takes us over to what we've been talking about, the coronavirus, the last 2 weeks or so. So, stocks are higher overnight because concerns over the outbreak have the death toll went up overnight again. There's 1,115 confirmed casualties and 45,000 plus infected. But I want you to keep this in mind. All right. So So
market
China has
around
changed the
next
way
minutes.
that they are
And
counting
yes, we have our ban
infections.
built. We know exactly what we're looking at.
It doesn't matter if you are tested positive for the coronavirus, they are not counting you as infected until you
Looking at the Delta
start
closely.
showing symptoms of the virus. And they increased the incubation period to 24
Again,
days.
for one to
So we are
one,
not
it's
getting the
gonna be
full
open.
picture out of China right now.
If we do get breakout there, we have
I
the
just think it's
80.
worse than they're telling us. I really believe that. That's why I'm a
Yeah,
little more
looking at
inclined to
strong
sell
Delta.
rallies. I think the story's, I think
Delta
it's
would
going
be
to
moved.
come out anytime soon. You know, people are going to catch on. I won't say we're being lied to, but we're not getting the full story. Moving on. The Democratic primaries. Bernie won New Hampshire last night. You wouldn't know that watching the news. Everybody's talking about Klobuchar making a good show. You probably didn't even hear about Biden dropping out or throwing the towel and moved down to South Carolina and Nevada. Keep this in mind, Nevada's a caucus state. We might see some fireworks there. So, I don't know. Keep your eyes open. Keep your eyes on the headlines. That's what I'm going to be doing today. Have a great one, everyone.
All right, thank you, JD. It's kind of disturbing the way that they have decided to count those that are inflicted with the COVID-19 virus is now what they're calling it. You know, they had said that early on that if you were infected but didn't have symptoms, that you were already contagious, and that scares me because if you're infected but not contagious, now they've decided that the incubation could be as many as 24 days. You can come into a lot of contact with a lot of people before you get those symptoms. I'm going to say it again. I said it yesterday. Say a prayer for everybody.
Yeah, so very lucky in live is
let's-
1 at
let's-
60, 1 at
Let's
50. We in
take
the
our
back.
deep breath. Stay calm,
Breakout
cool,
will
collected here.
be kicking it over ahead. Looking to be early in the market. Looking to trade the
All
market.
right, stay humble, grateful, and creative in your trading today. We will be back for the market recap here at 3 o'clock today. Unfortunately, due to an event in the office, we will not be able to present the coach's playbook for you. And I think we're going to be changing the date. I think we're going to start doing it on Mondays. Not yet? Not for, okay. Well, we'll look for you on the coach's playbook next Wednesday then, all right? So, no
Right.
coach's
Yeah,
playbook. We'll
can
see
do
you
it.
at 3 o'clock for the market.
see where
recap.
I can
3
do
o'clock,
it, yeah.
remember that? And get out there and profit today, man. Have a good trading day. Trade well. We'll see you later.
Looking at that band there. Close off that, take some stress off of that. So we have one area here. We know 5180 is max on the MC point of control. That might be that's our stop point. We may have a single sitting there outside for 10 a.m. trade if we do get stopped out. So a single might be in play for the live entry. Do have the chat box open. Doom, doom, doom. Alright, so what are you looking at? We about 7 minutes away. We do get run over here. We know where we're looking at for secondary entries. Be patient, and that 55, 52.20 is an area we're looking at. Getting into active side of the trade. Trading against the order flow is very difficult, so be very careful. We're looking at not calling tops and bottoms, but looking at areas of interest where the volatility, where the volume may be, and executing the plan. So the plan was to sell 51.50s to 51.60s. We on live we have 50 and 60. 55 is the entry we're looking at. And you can see why we're looking at that entry. Use the point of control from a micro composite. Look at the micro composite closely. 54, 55 is the entry you should be looking at right there, and the 50 was the entry for this. If we do get a breakout of that, there is structure right here at 51.80. That's why our stops are there, and we can get the entries. Why is my probably need to do a couple things, update a couple things. That's why we got in puffed. So your optimum entry time is always look for that 9:30 a.m. for oil, 9:30 to 10 a.m. for oil, to avoid getting swing out of the market and then swing back in your favor. What you're looking for is some participation in the market here. You can see participation just dropped off, delta just dropped off. Decision time in the market is here, right here. You can see delta starts to drop off. This is the opening push, this is the delta. Usually you will get this occurring at around 10 a.m. so be very careful of what you do on that particular trade. Right, we hit the 74s, looking for that opening of the market there. You can see point of control raise, where we look for overnight point of control raise. We targeting the fade and return back to downside, which is value area high, point of control from yesterday, which is a return. Just looking for the return on the open of the market. We know our stops are at 79. We'll be moving our secondaries in this particular way. So we have 2 contracts sell, average entry at 72.50 on July. The entry was based right here. We know where our deviation was at 74.75 deviation, which coincided with our high, which would be more or less a perfect entry if you get 74.5. It was yesterday's high. Looking just to pay the market back to point of control. And looking at value here, this is one we should change it to a 15-minute chart to get some idea of exactly what we're trying to achieve. And we're looking at secondaries between, looking at what occurs here and then manage through that. Now you're trading against all-time highs here, so be very careful of how you trade and what you're trading. So the opening market is in 3 minutes. We have some Fed speak on today, a couple other things going on, so be very careful of how you're trading, how you're executing. Looking for turning the oil market right on the open. Let's see if we get that turn in the market on the oil open. We hit 73s. Now we're starting to see dips. Want to see how the oil market opens there. Remember we had 50 and 60 as entry, which the entry is 55. You know where stops are built on deviation also. We're looking for 1-to-1 on the initial side of it. The 80 is a magnet, so be very careful of how you're trading in that particular position. So there's a 55 entry. If you have set weight into the kill zone, and then push down. We have an average entry on the live at 55. We are at the open on ES, looking for a fade on the market, early fade on the market. You can see we point of control, we boxy overnight, looking for that initial fade to yesterday's point of control to trade. Just want to make sure we clock off both TP1s. If you do fail on initials, we know exactly what the bank should be to trade. If you trade in singles, trade singles. Do not over leverage your account. Very important. Why is this particular side? Oh, my ad blocker has crashed. That's why. Need to check it. Opening delta. Going to the short side. They're looking to walk it back. Seeing how that 70 is treated. 70 would be inflection today. 70 to 74 is inflection today. Oil might pop out against your early o'clock, so be very careful of how you're handling the oil trade. Oil trade is the more risky trade than the ES trade, so if you're trading oil, be very careful on oil and how you trade oil. So your 70 is your inflection of which side you want the market to go based on what you're seeing in the market, trying to see if there are bears or bulls or price acceptance. Price acceptance has been occurring overnight, so you just want to see if the weaker money is a little too long and strong at the highs. And we want to see oil fade. If you do see the breakout will run you over very quickly. So this is thing about trading on the opening range. It's point of control just now lift. So that's where you're getting decision point right here. You want to have to see delta building on the short side here. Let's see what's oil doing. See oil stock. It's stuck. So this is where your active management is actually coming to play. You know where you're located, where you want to be, how you want to execute a trade, executing a trade. Like I trade on working orders. 1 at 50, 1 at 60. Trade what you see, trade small, trade smart. We know 80 is a magnet, 51.80 is a magnet, so that's where our stops are at 51.80. And so our entry is at 55 on live. We got filled at 50 and in 60. This is your inflection point. Let's see if I could show you. I have my book map up. Can show it on the screen. Now we'll look on computer. So let's go to FT. FT is pretty good. Always with the guy I like.
If you write anything on your computer, you need to get grammar.
Well,
I write pretty much all day, every day. And
yes, I can't spell. Where is the bookmark liquidity? We're looking at delta this morning. Don't see it.
Hello traders, it is 8:01 a.m. Chicago time on Wednesday the
Nope, don't see it. The liquidity is in a particular spot. So we early in the market. Just made a new all-time high. Be very careful. Delta just picked up. Continuation may put us in a bit of a bind. I need to get some coffee. Yeah, that is continuation. May get stopped out on that. We know exactly where our stops are located. Our stops are located there. Our secondaries. So that just got trading on the open. May look like getting to the 10 AM fade. We know exactly where that level is. If they target in that push, may take the single and trade out the single at 80s. Like if the target push is achieved, we go within the zone, within time and area, within that. So we look for the 10 AM trade. If the trade does fail, or this could be just creating a big shadow in the market, looking for higher prices offered. So this is what trading is about. if you're looking at prices that offered, you look at the inflection, where the inflection is, you trade logically. Logical trading is always necessary in the trade and not being scared out of our trading. Many times it happens. That's why I use working orders and tend to live with the consequences. So looking at order flow and stuff. If the order flow does come up, if the order flow does come up, so you see a lot of activity in this area, because we know exactly what what we would have the fight, where we would have the fight in the market. I don't tend to use ATRs, I use deviations. 20% of our implied deviation, we know if we up 24 points, we would be at 1 S, 0.5 SD. Try and load that. See what my Tesla are doing this morning. And be open. It made $12 at 35 contract. Not bad at all. Oh, wanted some at 675 and 650, but it doesn't happen. So from close plus 24, use the measuring rule. You can see we're at 24 right there. 81s. So I use my implied. Implied is more historically accurate for me to use, so I trade without fear. You look in orders and look for trade management more than anything else. We have a lot of price acceptance here. We are looking for the dip to the downside. We have this 66 might be end up being active value here low. If we do a breakout to the upside, we know the trade is failed. Having not stops too tight is something that we try to avoid. You look to trade and trade small, trade smart. For us, this is the stronger trade rather than the CL. CL has a magnet at 51.80, but we trade the plan the plan where we think the struggle might come into the market to be inflective. We know we have EIA news, the API signals bearish, so we want to be able to exit at 51.20 before the news. Want to see some bears come in the market. The market is pretty balanced within the kill zone. And I already showed you exactly why we have that kill zone, what it is. When it lies, the entry is at 51.50. I mean 51.55, which it is at the moment. So we are unbalanced there. And we trade on two separate accounts. One is for oil, one is for ES. The demo has both, just for because our demo focus is on easy to show you guys. So we have two screens up. The rig is 3 screens. One is for having both charts up at the same time, and with the analytical charts, and the two screens are execution charts with two different accounts. It draws a lot of power, so we need 16 megs. Probably might improve it to 32 on the RAM side. Trading on the new open is something very difficult. Primary execution time on the ES is for on ES we look at 10 a.m. as primary execution time. Dum 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 dum. Don't want to put on any music today. Today let's talk about asymmetrical opportunities. We rather trade with bigger stops and less contracts, especially with CL. According to what everybody want to do is trade with 15 ticks as stop. If you trade with 15 ticks as stop, that means you have to wait for that pop, go up past the kill zone, fade, come back, then enter a trade. Not what we like as a plan, because if you already see liquidity in our area, likelihood of it pushing through, and once it does push through and taking us out with bigger stop, is lower than actually looking at this and trading and being on the wrong side, because in past experience we got nervous. So I've been doing this for 5 years, 5, 6, well, on the futures account a reasonable amount of time. Used to trade options. So we're looking at the 51.20. Guys, if the trade is successful, then I'm gonna work it happen. Looking at around 10 a.m. to get that exit. Then probably might be able to save ourselves 5 points on the stop side. For the continuation, we want to be bearish on the news release. So that's why we have 2 contracts instead of 1. So it's about 70% knowledge and 30% luck. Because you cannot will the market or what to do. Market does what it wants, when it wants, how it wants. You can see we probably got stuck. We stuck in both sets of ranges, so it's decision time for both. You might be now wanna break even on the yes. A little bit behind. Really do want them to bring in a micro oil, because the cost of trading oil futures is literally ridiculous of the quality amount of leverage. So we are allowed to only trade 5 contracts on each of the items for the day. So we wait out how we look at to get in into the trade and out of the trade. So you can see that 9 o'clock opening range. Just want to see basically a retest of the 9 o'clock opening range. This is your opening range here. That's what we're looking for on the primary side. There's my shapes. Come on, ellipse. Thank you. That's your 9 o'clock. This is your opening 5-minute range here. I want to see be out of the market at 10 a.m. on that side. Measure risk, measure execution. If you do get skunked, you get skunked out, it's straight in. I don't know if the starting to get that. This is very heavily in flexion now. So this could go anywhere. It's either acceptance of price or we have BS coming in the market. So be very careful of what you're trading after 74.5. Could be used as a kickoff point or a reversion point in the market back to balance. We've been leaving a lot of naked POCs out in the wilderness. Make sure that's stream running. Nope, not there. Make sure the stream is running perfectly. Alright, good. On the stream is running. I do this a lot for myself, more than anything else. Just being responsible for how you're trading and what you're doing, how you're executing your trades. Now we capable of execute trading through the news. If you're on top step, be aware of that. So we have tentative release of the EIA. Why am I getting a lot of news alerts this morning? Close. Close. All we want to do is see at retest of the opening range. We'll say we'll put our stop at 75 if we are successful here and book that 30 points of profit. Our actual TP is at 25 because our average entry is at 55. We just take the 20 pips off on that. Dum, 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 dum. We're in two positions at 72.5 on yes. There's your opening push, opening version. Needs to break this opening range. First, I have much confidence in it. Right, we be lifting our TP to value area low, which is at 63.5, 66.5. 66.75 at the moment. Want to see what value is, treating as active value. Your primary take profit, the secondaries remain at that area there. And we may look for what the close was yesterday as we TP range. I think it was 58. We used 60 flats as our TP. That will give us 12 points of on it. So this is active management. If the trade does go your way, we know what the stops are, what that is, where we're looking at, where our stops were located, what it is we're looking at. Perfect entry was 74.75. That's a point of control at the moment. Looking for that dip to continue to the downside. You see a range right there. Following that tight range, you have structure, right, 67. But the expectation, most important thing is to get out of the primary. Book profits on the primary is the most important thing. And if you do get skunk, that means you got skunk. We placed our trade where we were supposed to place our trade with our average entry, where we were traded. Close at 10 a.m. gets, that's when you need to do some live management on the trade. Take some risk off if possible. So I need to get some sort prunes. I'll even trade up and running. Probably at yes. Do what it has to do. We'll see where that point of control is. If it's up here, you know exactly where your stops need to be now. See the breakout of that opening range. You want that range to hold beyond 10 a.m. What's going up with this web page? Again, whipsaw. The point is still in. I will be holding this. We have about 20 minutes again before oil news come out. You can trade through the oil news. If you're trading on a top step, do not hold any position through the news. 51.80, 51.60 might be an entry for oil. Oh, I need to go and play video games. This market is locked in place. If those running, hopefully need to find out why my ad blocker is not working. Hopefully computer wouldn't get shut down. Can play some video games in the meantime. Next 15 minutes until the news come out. Views are hot. Oh, wouldn't know if I'll be able to run all that. Let me see what I could pull. I'm already sticking. Crap. saved. Run a couple games. See if it would work. Only have it make the RAM on this. So that's why I am with these stickers and stuff. Hopefully I don't pick up a lot aloud. I'll probably might run one game. This is World Attack Blitz. Pretty neat game. Hopefully I wouldn't get high ping. Ping should be like about 100 to 120. Bum, bum, bum. And 7 aside. Let's see if we can get into a game. Two guys. It's a dangerous tank here. We are a little bit short on the med side. Seem to be lagging. Nothing that bad. Gaps.
One of our trucks was hit. Enemy armor is damaged.
What? Two shots? Where the hell my backup there? What? Where I'm hiding? Oh Jesus Christ. Worst ever. Right. Doom 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 doom. Right, or it should be finicky right here. What I might do is pull the initial out early on lives. I set that there. Wait for to open hold the single to the outside. Why? Whoa, monitor. Be careful. We're 8 minutes away from oil. Do this, pick up some silver flag, clear some RAM up. lagging a bit there. So we have crude oil coming out now. May get pip here. We're expecting the move to be bearish, so the trading, do not be trading if you're on top step. At this point, you are not allowed to trade through the news. You can see what we're looking for, the inflection point at 50 to 60. Right there. $55. Maybe cover that entry. $52.32 is your last sell you want to take if you get plowed. It is the MC point of control, the big MC point of control. So come on, stop sticking. Why something should not open that game. Lost some resources. No, they might have been hunting at 51.80. So they just flushed the open market, pre-market, open market. I haven't retested the opener yet, which is a bit worrying. May get stopped out here. Pick up my mouse for my life one time to run executions. Doom 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 doom. We're on liquidity hold there, and you see 10 a.m. flippy flip back into this knotted area again. Range is tight, very very tight. And yes, news might give you the whip. You see, it have very little volume this morning. Right. The safest bet for us to do here is take break even, making the adjustment on my life first. Too close to news here. You want to be bearish, try not to get whipsawed out. just made that change. Them lives. Take the break even on the 50. On one of the contracts, hold the secondaries, look for return, clipping. I'm gonna clip 51. On return, you can see what we're looking for is the opening range or the test range. On the open, leverage, try to leverage down as much as possible. On the news, hopefully we can get whipped out first and then whipped in. If you're trading on top step, wait for 1 minute after, look for push down, retest, and then push down. That is what we're looking for in execution wise. If it does break to the upside, we know exactly what we're looking at is the 52s, 52.20s. We have that right there. That is a big inflection point. Why am I getting results like that? To check my settings or my ad blocker is down. 1 minute out. I expect we do get flush here. It would be so sad. VWAP opening range low is the target. If you're on the short side. Which we expected the shorts are coming to the market right on the news. Right.
Order filled.
Got filled on the order. You're looking for this 51 flat, 51.10. Took the break even. Know that we didn't want to be in danger here. Look for the reaction in the market. You have 1 minute. If you're on top step, look for the not on the range. Look for that 51.60 return. Hit here, return, and then go to the flush trade downside. Let's see what the actual number is. Reaction is muted at the moment. You should have a bar counter like what I have on the ES. Whoa, 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 whoa. 7.5. Come on. Blocker is wrong. I had to reset my whole. Damn it. Right, so bearish. I could sell the market there right now.
Order filled.
Right, sold the market. Let's see if I can get that up. Alright. I just make a comment. see, opportunity live entry, bang, bang, bang. I waited a 1 minute, 1 minute execution. What are you seeing? Where's my trade? Nope, not there. Nice. Stupidness. I can't find that. Here, can't put Bordeaux performance and then activity log. What? Yeah, always have, yeah, always trace back from your activity log of what it is. I'll put of that. So the bill is always expected from the API, which builds us that is a build unexpected. Looking for that execution, that's what I did, to the top of the band. Quick bottom live on them, what the same time I actually got to fill that for 51s on the live. There's a little quick thing, guys. Nobody be able to come in at least with us here. Looking for, yeah, and part of your kill zone. Hit here, break here. Roll stops out above 65s. If we do get filled, just looking for this order flow to continue to the downside. If it doesn't, we know we capped. I made a little bit of profit on the position side already, so you always see a lot of closing outs coming into the market, more than likely. The counter move happened overnight, so that's why we expect station on the BS. So push up overnight, expectation for the BS to come into the market based on the news release. This is the kill zone, this is the execution. There's your pinpoint execution right there. If it was a patient guy, point of control is shifted, and whole point of control is where is my I don't see it. Where is it? Maybe know the whole point of control as 55. Looking at possible test right here for the low section. Pull the trade over here, the buy side trade. I want to see if we have theirs and how much they are, how much power they have on it. Kind of some initial risk, took the break even, then took the re-entry for the downside. And you can see 55 is more or less the perfect entry you would want to get there based on nodal values. Leave the ES to run as is. If we do fail on the ES, call that. If we trading range on ES is very tight today. You can see we have stacking going on. It's a lot of stacking going on. So we wait for, come on, let's see in the settings there. What do I need to go to? Settings. Where I find extensions is, I'll find it later. They expect the track to get out with it. If it's 72 is looking at that 67 to 66 area. You see how tight the trading range is. The trading range is too tight now, so we take any 1-to-1 execution on the trade. So 72 minus 6 is 64, 66.5. So we'll take our off of that 66. That just changed on our lives also. Looking for the lock value. Bang bang. 74 entry. Look for the lock value for the down move. Wanna see that clean break of that 50 level. Make sure post right in execution. Okay, where we have one live. Bang bang bang. Yeah, that's correct. See how it works out. Both stops are at we follow the top step rule, so you know, as with any trade, you could get stopped out if the market does not agree with you. Especially on oil. Oil is somewhat of what we call move counter move, so sort of stuff, all of that. Not really manipulation, but manipulation. So because like the API reported last night, bigger than expected, which was correct. BSC doesn't. The there you can see it's almost double. See a little more delta on the short side. So if you're looking at the 1 minute chart, they're trading. Yeah, what your execution point right there. I had 5 whole minutes to execute that trade. You see lock node 55. Yeah, I don't want to chat with you. So that was your execution right there. Perfect execution if you execute that trade perfectly. That would have been your perfect execution there. That is not to say the trade would not fail. It's just what you're executing and what you're looking at executing. Look at that node, we're looking at that 55 as perfect entry all morning. This is what it was. If you got that to that, order flow in, order flow out. Patience, you retest comment to that 32 and then it should drop off. Right. Let's wait for it. There's a node. Alright, 37. 35, 37. Alright, yeah. You can see where view up located. Make the adjustment. Want to see it doing that. Close off at 25. try to avoid the mess. So the expectation is for bounce, come into the area right there, puff, drop, and then drop through. Now we don't want to risk a lot on in case we may get bounced back and then put ourselves in trouble. I'll power to trade this. So we just look at reducing risk and look for the secondaries on the longer frame. So this is very called active management. It's not taking TPs because we missed that initial one tick. Yeah, it would be one tick. So it is we were looking at this, then the push back down. If we had gotten filled here, all well and good. On the initial push, just don't want to champ it, we just want to get out of that initial position. As we stated before, the initial position is the most important position that you have in the market. Knowing where the vacuum is, what time it is. Don't want to be caught. Although we know where stops are, we just want to reduce risk as quickly as possible. Because we know this area might be knotted up, and if we do get breakout at this area, it could be trouble. Go back to the 5-minute chart. So you can see the execution. Why this? Oh, one click on. So you can see what we're looking at. Right there. 37. Looking for the order flow to pick up. You can see pre-up is matching on this side here. You can see the low volume node right there. See why that low volume node was 22s, 21s as the initial target. We may extend once we close off here. Look to see if we can get a breakout value. Look at the active POC. If we get it closed, you have to be very careful on how you're managing your trades here. Allow the order flow to work out. Don't be too scared. Make logical decisions. You want to bank some of your capital and look for the runner. Don't have too much fear with these stops at weekly right now. Just want to make sure we can clear that hurdle. Don't need to watch that on the chart all day. And locked up, totally locked up. We had VWAP, we had sell, we had everything, no clean breaks. So if we did get in on the optimum position, which is 74.5 75, what is it? Forgot. Open that up. Oh, it would be on the deviation. We would have gotten out of the 1-to-1 already on the secondary. How it works is first in, first out the trade. So see. Yes. Wow. Why is my ad blocker off? I need to fix that sometime during the day. Right, because it is 74.75. Looking at that. KTP is 74.75, but look at this note here. This is a 10 a.m. entry for the push down, which would have been a clean trade. So if you looking at selling the highs at 74.25, for that clean trade push to the downside. Come on, oil. Close the jet. Chill is getting tired, very tired. Right, you leave that to run. So that is about where we have a position this morning. It is now 5 minutes to 11, so might head out. So we have a short, we're looking at 25s, and then we're looking at secondaries. We're going to push the secondary to 780s, 50, 80. Just carry 20 kick off. That is 50, 90 to 50, 80 would be a secondaries. Because of that, we're going to take care of some internal business. What we gonna do, how we gonna do that, and trade small, trade smart, guys. So hope you had a good morning. I've been streaming like for about 2 hours, so trade small, trade smart. Bye.